Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we are into the midweek of the week itself, and we have seen that the Nifty has registered a third day of losses, and there was some late selling pressure which made Nifty succumb to selling pressure as well. But yes, the picture could be better today. We are starting the December series today, and the average returns over the past decade for Nifty has been about over 1.5%. And similarly for Bank Nifty, it has been quite in the positive territory. So yes, we'll watch out how the December series pans out for the markets. But yes, for today, the trends in the Gift Nifty that do indicate that we're off to a gap up start. We'll watch out in just a couple of minutes how the pre-open rates stack up. But yes, the global picture that remains quite rosy. If you look at the US markets, they ended higher overnight. Beat your Dow Jones, that jumped over 650 points. S&P 500 also rose by about 0.7%. So there has been some growing rate cut hopes as well, which has kept the market hopes quite alive. We did see a weak labor data that came in from the US as well, and that has also further reinforced the probability of a rate cut going ahead in the month of December. But yes, right now the markets have been pricing in about 83% chance of a rate cut in December. So that is something that is a positive cue that is coming in. But yes, there has also been some reports which has indicated that the White House Economic Council advisor, which is your Kevin Hassett, is being considered as the next Fed front runner. And, he's been a dove. We'll watch out, given that Trump has always indicated that the rates should be quite lower and the policy should be in an easing environment. So yes, Kevin Hassett's name has been considered as the next Fed front runner, and we'll be watching out whether or not this takes place as well. So yes, coming to the Asian markets, they have also opened higher. We did see both all the markets in the Asia Pacific markets also gain in today's trading session. But yes, important moves that came in from the commodities front, where oil prices have moved lower, given that there have been reports that has suggested that the Ukraine government has agreed to a peace plan brokered by the Trump administration to end the war with Russia. But so far it is far from certain if Russia would assent to this revised peace plan which has been come in, given that they have already narrowed the 28 peace point plan to about 19 points. So yes, it's a developing story, but we'll watch out for more details. Both oil and gold prices have edged lower on the back of this news development. But yes, back home, we are starting with the last series of the year, and after the tepid November series that we saw, let's see if the bulls can rager and fight back. And we'll discuss all of this and more with our experts, which is lined up in our show as well. We'll also be talking about stock-specific reaction. So keep posting your stock-related queries and we'll take them up shortly. But let's take a quick look at the top headlines at this hour. Stocks on Wall Street end the trading session higher for the third straight session. The Dow Jones jumped at 650 points, extending winning streak to third straight day on hopes of a December rate cut. Asian markets have opened higher, tracking strong cues from the Wall Street. The Gift Nifty, meanwhile, is indicating a positive start for our own markets. Crude oil prices fall as Ukraine showcases support for framework of a Russia peace deal. Gold prices also slip on the likelihood of a war ending in Russia. Ukraine president has said that he's ready to advance the US-backed framework for ending the war with Russia. He did say that he will discuss the disputed points with the US president in talks that will also include European allies. And Bharti Airtel's promoter entity, Indian Continent Investment, has launched a block deal valued at over 7,000 crore rupees. The shares are priced at a floor price of 2,096, which is a 3% discount to yesterday's price. Right, we did see that the Nifty has extended its losing streak for the third straight session and yesterday, and the index also failed to hold above that 26,000 mark and slipped below that 25,900 levels as well. But yes, with some of the sectoral indices that led the gains, that included the likes of your Realty, PSU banks and metals, which did see some positive traction in yesterday's trading session as well. But yes, so what did not do well was your IT stocks that succumbed to some of the selling pressure, and consumer durables also fell in yesterday's market as well. But yes, the broader end of the markets, they showed some resilience and they outperformed, given that the mid caps and small caps, both of them rebounded in yesterday's trading session. But yes, there has been some caution ahead of the US inflation data and of course the Fed policy signals, which will further shape the market direction going ahead as well. But yes, it's a start of a new series like I was talking about, and Nifty has gained once over the last 4 years in the December series, but the average returns for the past decade has been quite positive for Nifty. That is about 1.5%, like I was discussing earlier as well. What will drive markets in the December series is that India-US trade deal, something that we are yet to watch out. And of course, we have been hoping that by the end of November or early December, there could be some action on that on the trade deal front. But we'll be watching out whether or not this takes place. Then we also have your Fed meeting, which will be on 9th of December, and we'll be watching out more cues whether or not the Fed opts for another rate cut, and that is followed by the RBI MPC meeting later in December as well. But yes, these are the cues that will shape for December series. But where did fund flows stand in yesterday's trading session? FIs, they stood as net buyers in the cash markets, bought stocks which was worth about 900 crore rupees. DIIs also bought stocks which was worth about 3,400 crore rupees in the cash markets itself. Option cues data showcasing where that Nifty put call ratio has jumped to about 0.95 from 0.77 levels in the previous session. And the stock which has come out of the F&O ban, that includes the likes of your SAIL and Samman Capital, and no new stock has been added nor has been retained in the F&O ban list as of now. So yes, those are the cues that we need to watch out for in today's trading session as we go ahead. But yes, let's take a quick look at the pre-open rates of where we stack up. Sensex down about 80 points. Nifty is also down by about 41 points as of now. So it's indicating a lower start in the pre-open, but we'll watch out whether or not this cue gets reversed in the opening bell. But yes, let me get on board with the technical expert of the show. We have Ruchit Jain of Motilal Oswal joining us. Ruchit, yesterday it was, of course, an expiry day, but Nifty also slipped below that 25,900 levels. So what can we watch out for December series and any levels that we need to track from here on?
Yeah, hi, very good morning, Lovisha. Well, if you look at the rollovers, then the rollovers are lower than last 3 months average. And the recent trend, if you see for the broader markets, have not been that strong. So we believe that the market is starting with a bit lighter positions. Even if you look at the FIS data, then although the long short ratio still seems around 85% positions on the short side, but in terms of number of positions, no, the number of positions are not that very high. About 20,000 contracts on the long side and 1,15,000 contracts are there on the short side. So we think that in the short term, markets would see some consolidation as far as indices are concerned, and that would be more of a stock specific or sector specific movement. Even in the November month, if you see, then the small cap index has shown a significant underperformance, but certain sectors within the large cap space and all the large mid cap names like NBFCs, banking, they have shown some relative strength. So we believe that overall market would continue to see some consolidation. There are no signs of any trend reversal as far as small caps are concerned. The way the markets have corrected in last few trading sessions, that relative underperformance could continue.
Okay. Ruchit, in yesterday's market, we did see that the PSU bank that held well, and we did see some positive momentum coming in from SBI that led the charge from the PSU banking back. But anything that you're finding attractive at the current levels from the PSU banking basket?
So yes, there has been a good relative outperformance in the PSU banking space, compared to what overall we have seen in broader market. So, and that trend is likely to continue because the large cap stocks such as SBI, Canara Bank, these are leading the momentum, and we are witnessing that whenever there have been some small corrections at lower levels, there is significant buying interest in this PSU banking space. So stocks such as SBI, Canara Bank, and even Bank of Baroda are likely to see a continuation of the uptrend going ahead.
Okay, all right. PSU banks, of course, they did well in the November series, also one of the top sectoral performers for the November series. But yes, Ruchit, what about IT sector? I mean, good performance in November series, and so far also in the month of November, we have seen a good uptick coming in from the IT stocks. How are we placed? Can we see further upside going ahead?
So I believe that price-wise corrective phase for IT space is behind us now. We have seen last 1 year the IT index as a whole had seen a significant underperformance until this quarterly results were announced. But no, now there has been some stocks where the volume is gradually picking up. Stocks within the frontline stocks such as Infosys is there, or even Tech Mahindra is there. Structurally, it's are looking good. So IT is one space where one should look for more from a bit mid to long term perspective rather than very short term trading. I think if one has to make IT stocks as a part of the portfolio, and this is a good time to add on stocks for bit medium to long term stocks such as Infosys IT. Infosys and Tech Miner, these are a couple of the names from the large cap names, which looks good at current levels to buy for portfolio.
Okay, all right. That is something that we need to watch out for. What about the realty space? I mean, of course, yesterday we did see realty stocks also did well. It snapped its 5-day losing streak, but do you think that it can pull through going ahead as well?
It has been an underperformer of late, but yesterday's move, I think maybe because of the short covering, it was an expiry day, so some short covering moves could be there. But no, overall, if we see the trend for broader real estate space, then that does not look much bullish over here. Only selective stocks such as Phoenix Mills is showing a good outperformance when the entire sector is correcting. But we would wait for some trend reversal signs in the sector as a whole before recommending any long positions in the realty space. So has been an underperformer, no signs of trend reversal because the sector has seen a sharp correction, beaten down oversold readings. So some in between pullback moves could be there. Phoenix Mills is the only stock within the entire real estate space where relatively we think it is showing strength when the entire sector is correcting. But apart from that, the outlook is not positive for the short term for realty space.
Okay, short-term outlook is not positive for realty space, but Phoenix Mills is something that you're positive on. Ruchit, what about the metals? I mean, for the November series, we did see that the metal stocks had, lost some of the steam given the kind of rally they have had. But how would you see the next upcoming month to pan out for the metal index? And of course, anything that you're finding attractive at the current levels?
So metals also, I think some consolidation could be there. November has been a series of correction. In fact, for many of the metal names, where after a 3 months of up move, we have seen unwinding of long positions now in many of the metal names. And relatively, I think there could be some time-wise correction within the metal space. Last 3 or 4 months before November, we have seen a significant outperformance from the metal stocks, and that positions have been unwound of late. So I think some time-wise correction could be expected within the metal space.
Okay, some time-wise correction could be anticipated. Anything that you're finding attractive then at the current levels from metals?
So I think NBCs is one space which looks attractive. We have seen that in last few trading sessions, in spite of such weak market breadth, stocks such as AB Capital is there, Shriram Finance is there, L&T Finance, M&M Finance. So this is one space where good buying interest is there. Prices are not falling, the stocks are not falling, even when the market is falling. The 20-day MA for many of these stocks are still intact. So we are positive on NBFC space where we think that even during the corrective market, if stocks are not falling, then that clearly indicates that the momentum is there on the positive side. So that uptrend could continue in stocks such as AB Capital, L&T Finance, Shriram Finance, to name a few.
Okay, okay. Ruchit, what about the defense space? I mean, last month we did see that the defense stocks have cooled off from its levels, and we did see a majority of the defense giants also, losing some of the momentum. Hindustan Aeronautics also declined, and we had some, BEML also declined in the November series itself. What do you think the next leg of rally? Do you believe that there's a next leg of rally for defense stocks, or has it already turned quite overheated?
So no signs of rally as of now. So I think one might wait for some trend reversal signs. Bharat Electronics is one stock which we like from positional perspective. So very selective within the defense space. If one is trading, then one can keep a wait and watch approach.
Okay, okay, they can keep a wait and watch approach for majority of the defense names. That's the cue. But yes, the first rates coming on your screen now, where the Nifty has opened above that 25,900 mark. 0.2% gains coming in for the Nifty. Very mild start, 58 points uptick. Slowly and steadily, let's see whether we get on there. Sensex also opened with about 200 points gain, 0.2% gain coming in for the Sensex as well. So yes, both the benchmark indices off to a positive territory, snapping its 3-day losing streak as of now. But yes, let's take a look at the broader end of the markets, because that was the pocket that showcased some resilience yesterday. If you look at the mid-cap index and the small-cap index, both of them have started quite positively, but flat with a positive bias as of now. They've been underperforming the benchmark index as of now. And the bank Nifty has also opened in the positive territory with about 0.2% gain. And on the other hand, if you look at some of the sectoral indices, majority of them have opened in the green, apart from your Nifty FMCG, which is showcasing a little bit of a decline, flat with a negative bias as of now. But if you look at Nifty IT, 0.4% gain. Nifty Pharma also flat with a positive bias. Nifty Realty flat with a positive bias. Nifty Auto after yesterday's loss with about 0.3% gain. Nifty Metal once again pulling through with about 0.2% gain coming in for the Nifty Metal Index as well. Now let's take a quick look at some of the top gainers and losers on the Nifty 50. You can see that the likes of the top gainers on the Nifty 50, you can see the likes of L&T has done well, nearly a percent gain coming in for the counter. Tata Steel also showcasing some good moves with about 0.7%. Geo Financial, majority of the metal stocks have been dominating the list on the Nifty 50 as of now. Tech Mahindra, Trent, some of the other gainers on the Nifty 50, Tech, Bajaj Finserv, SBI once again doing well, 0.5% gains coming in for there as well. ICICI Bank also seems to be doing well. So the private lenders have also pulled through today. Axis Bank, ICICI Bank, Kotak Mahindra Bank, all of them showcasing a gain of about 0.5% as of now. Now let's take a quick look at how the losers pack look like. Hindalco showcasing a loss of about flat with a negative bias. After yesterday, we did see it was one of the top Nifty gainers. Tata Consumer Products showcasing a decline of about 0.2%. Apollo Hospitals not seem to be doing well in today's market, and Dr. Reddy's Lab also seems to be taking a little bit of a setback as of now. So yes, it's a mixed queue as of now, but yes, we have started in the positive territory, and that's what we have to take a positive cue from as well. But let's discuss one particular stock in focus, that is your NCC. The stock is exhibiting some good moves, given that the company did say that they have received an LOA from the Public Works Department of Assam for expansion of its Guwahati Medical College and Hospital in Guwahati as well. So yes, the stock has been showcasing about nearly 2% gains, but in the past 1 month, we have seen the stock has seen quite a sharp slide. Ruchit, what lies ahead for NCC? The past 1 month has been quite negative for the counter.
The overall trend is not positive for the stock, but just because the momentum readings are oversold and we have seen some positive news flows coming in, and then some pullback move could be there towards 185, which is the 20-day exponential moving average. But I think that since the broader trend is not that strong, one can avoid any kind of bottom fishing over here.
Okay, one can avoid any bottom fishing for the counter, that is your NCC. And of course, let's talk about Bharti Airtel on how this particular counter has been doing, given that we had some reports which suggested that its promoter, that is your Indian Continental, is likely to offload 7,000 crore rupees worth of shares as well. So of course, right now the stock has been exhibiting some downward moves, 2% downtick coming in for Bharti Airtel, and about 3.5 crore rupees, 3.5 crores shares have been exchanged in the block deal. That's what the update has been coming in. Ruchit, Bharti Airtel, of course, it's been a phenomenal performance for this telecom counter so far this year. But going ahead, what can we expect? It's a block deal which is weighing the stock down today.
So the longer term trend still remains intact. We have seen a series of higher top, higher bottom, and as you said that we have seen a good outperformance from this stock over last few months. Just because of this block deal, I think we have seen some correction today. But that broader trend is not negative. So just from a positional perspective, I think one can keep a buy on dip approach. The stock is right now trading around its 20-day MA, which is around 2100, while 50-day MA support is placed around 2040. So these are the immediate support levels. No, any kind of dip towards this 50-day MA could be used as a buying opportunity for Bharti.
Okay, all right. That's the view coming in for Bharti Airtel, and of course a block deal which we have seen in the counter itself. But yes, let's talk about HCL Tech as well. The stock has been showing some good moves, given that the company did say yesterday that they have entered into a pact with Amazon Web Services to accelerate transformation across their financial services industry through AI-powered solutions as well. But yes, of course, the entire IT pack has been an underperformer. But going ahead, of course, Ruchit, any levels you want to specify here? Because you were saying that the time-wise correction for the IT stocks could be over.
The 1550 is a good support for the stock, which is the 200-day EMA. Usually, we see that whenever the stock corrects towards the 200 EMA, after surpassing that, that acts as a support. So I think one can look for opportunities and corrections if the stock comes around 1550, as the risk reward ratio could become favorable over there. Apart from that, as we discussed as the start as well, that within the IT space, I think Tech Mahindra and Infosys are two stock where overall trend, the structure looks positive. So IT, one can look from a positional perspective, not for immediate trading. But Tech Mahindra and Infosys would be preferred. HCL Tech, any dips towards 1550 would be good to buy.
Okay, all right. Infosys a better pick than HCL Tech as of now. All right, let's take some viewer queries that is dropping on our live feed. The first query coming in from Naveen is asking the view on Eternal and if any fresh entry levels is advisable for a positional trading. Ruchit, what's your view on the counter? Of course, we have seen that the stock has slid by about, from 350 to 300 rupees per share. That's where Eternal has been trading. But would you advise that this is the current level for positional trading?
Need to see a follow-up move because price-wise already we have seen a correction from 360 to 300, and the 200 DMA support is placed around 286 to 90. So the downside seems to be limited from here on. But no, the volumes need to pick up at current levels to indicate that the stock could bottom out around this 200 DMA. So I think if you're looking to buy, then you can add some quantity, not full what you want to buy, but maybe around 40% of whatever quantity you want to buy. You can buy at current levels and wait for how follow-up action is seen over next few trading sessions to add up more positions.
Okay, all right. That's the view coming in for the counter. Let's take another viewer query. We have Shivakumar was asking the view on Bank of Maharashtra. He's been having 400 shares at a price point of about 58 rupees. And he's asking what is the prospect for the next 1 year and whether he should switch. So it's trading near his buying price itself, Ruchit. But what would your advice be for Bank of Maharashtra? It's at 59 odd levels. It's nearly at its year's high.
Yeah, so overall, we have seen that the PSU banking space has done well over last couple of months, and I think that uptrend could continue on the sector as a whole. Bank of Maharashtra has a good support around 55, 57 zone, and till that support range is intact, we could expect a move towards 65 to 67 in the short term. So hold on your long position. When the stock comes around 65, if it comes, then you can take a review again at those levels.
Okay, all right. That's the view coming in for Bank of Maharashtra. Let's discuss about another stock in focus. That is your United Breweries. The company has announced the launch of Heineken Silver in New Delhi, and the availability is expected to begin from yesterday itself. And the product will be offered across bars and retail outlets in the capital as well. For United Breweries, of course, the stock has slid so far this year. Today also the stock has been underperforming, nearly a % cut coming in there for Ruchit. But what would you expect? I mean, is the trend expected to remain the same?
Yes, at least the near-term trend seems negative only. We have seen a low top, low bottom structure. The pullback moves are getting sold. The stock is not even able to manage to move above its 50 DMA recently. So I think the sorry. So I think the short-term trend still continues to remain negative, and until we see any kind of trend reversal signs, it's better to not to do any kind of bottom fishing. In fact, no, last 6 weeks the stock was managing to take support around its weekly 200 EMA, which has been breached this week. So this could see a continuation of the underperformance.
Okay, all right. That's the view coming in for United Breweries. Some underperformance could be warranted for the counter. Let's take another viewer query. We have Contech, who's been asking the view on Keynes Technology for an investment horizon. Of course, so we did see that the company has outlined its 5-year growth plan and margin plans during its analyst meet as well. And following that, brokerages have given out quite a mixed reaction following this particular analyst meet. Nuvama has maintained a hold rating, citing that valuations are yet to become attractive for Kaynes Technology, while MK has highlighted that strong FY26 revenue guidance and their robust order book is something that we need to look forward to. But yes, coming to you, Ruchit, Kaynes Technology, an underperformer this year. But what do you make of the stock going ahead?
So we have seen a price-wise dip from 7,600 to 5,800 recently. So overall price-wise, I think the stock has seen a decent correction. But major support, if I look at a bit mid to long-term chart, that is placed around 5,500 mark. So I think one can keep a strategy to buy some quantity at current levels with a room to average in case we see further declines going ahead. Because of this recent price-wise correction, I think no the risk reward ratio could become favorable if the stock sees some time wise correction or consolidation in the near term. So you can start buying over here, but keep some room that in case if we see further dip towards the 5,600, 5,500 range, then you can also average or buy more at those levels.
Okay, all right. That's the view coming in for Kaynes Technology. Let's take another viewer query on that note. We have PKB Sahai who's been asking the view on K FinTech because he's been holding at about 1102 rupees and he's asking whether it's a good idea to average at the current market price or is it time to exit. 1102 rupees and of course the stock is at about 1062 at this point of time and the stock has been quite an underperformer so far this year as well. Ruchit, what's your view on the counter? Should he hold or exit at the current price?
1015, 1020 is a good support range for the stock. As of now, the stock has seen some consolidation over last 3 or 4 months, but the stock has not breached those support levels of 1050, 1015. So I would suggest to continue to hold as of now. Keep a stop loss below 1015. In case if the stock breaks that 1015 levels, then you can take a decision to exit from your positions. Otherwise, these are not the levels where you should think to exit from your existing positions. So you can hold on your positions. No views to add more or average out. I would suggest just keep holding the existing positions. I don't think there is need to do anything else at current levels.
Okay, nothing to do at the current levels for both of these counters then. All right, let's take another viewer query. We have Dheeraj Sharma who's been asking the view on GAIL and Power Grid for a long-term perspective. Both GAIL has been quite an underperformer and of course Power Grid has also not moved anywhere so far this year as well. But yes, coming to you Ruchit, how do both of these counters look on the charts?
Not from a trading perspective, but the query is more from a longer term perspective. I think this underperformance has resulted in a good risk reward ratio now for long term investment. So we believe that if one can have a patience and hold this for a longer term, maybe at least 2 years time frame, if you can keep, then at current levels you can certainly create fresh long positions in both GAIL as well as Power Grid.
Okay, all right. Can hold the positions for both the counters then. Let's take another viewer query. We have Satvika who's been asking the view on Jubilant Ingravia on how the counter looks like. Of course, the stock has seen a recent breakout and today also the stock has been doing quite well. Coming to you, Ruchit, Jubilant Ingravia, can we see further upside?
Yes, the momentum seems to be positive. 745, 750. Right now, the stock is trading around those levels only, which were the previous swing highs in the month of September. So if the stock managed to surpass this range, then we can see an up move towards 780 in the short term. And the good thing is that last 5 or 6 trading sessions, the stock has managed to form a good support base around 725. So 725 now becomes an immediate support for the stock. So if you have any existing positions or looking to buy new, then you can keep a stop loss below 725 and trade with a positive bias.
Okay, all right. Trade with a positive bias for Jubilant Ingravia. That's the cue. Satvik has also been asking the view on Voltamp transformers, Ruchit. I mean, despite being an underperformer so far this year, we did see that they were trying to play a catch-up in the month of November itself. Some gains did come in, nearly 9 to 10% itself. But how does the near-term horizon look like for the counter?
So some pullback move could be there in the short term. A bit mid-term, if I see the charts, then 6,700 is a good support for the stock from where the stock has reversed in last 1.5, 2 months. And if this level remains intact, then the stock has potential to go higher towards 9,700, 9,800. So can hold on existing long positions if there are. So broadly, 6,700, 6,800 has become the support base now.
Okay, all right. That's the view coming in for whole-time transformers as well. Let's take another viewer query. We have Kanan Manthan who's been asking the view on MCX on how the counter looks like. And of course, today the stock has been doing well. And in the past 1 month also, the stock has exhibited some good moves, nearly 8% gains coming in for the counter. Ruchit, for MCX, any thoughts?
So overall trend still remains positive. In fact, if you look at the stocks within the capital market theme, then MCX has been an outperformer, and still the stock is trading around its all-time high levels, and we could see a positive momentum continue over there. Last few trading sessions, when we see some broader market correction, even certain stocks within the capital market space did see some price-wise correction, but that did not have any negative impact on MCX. So the stock which is holding well when the sector has seen some correction, this clearly indicates relative strength in the stock. So I think the stock has potential to go further higher towards 10,500 to 10,800.
Okay, all right. That's the view coming in for MCX as well. Some good moves could be coming in for the counter. All right, let's take another viewer query. We have Padmanabhan who's been asking the view on whether we can purchase Tata Motors commercial vehicles for the long term. Any views on the counter? I mean, I know that it's just a recently listed counter up following the demerger, but any thoughts, Ruchit, for the counter?
No, Lovisha, no idea on this one because of the demerger. No, I don't have much historical data on the as or charts to study those. So I think it's better to take no view of some fundamental analyst on this stock.
Okay, okay, all right. All right, let's take one more stock in focus. That is your Zydus Life Sciences. That it's exhibiting some good moves given that the company has already received a final nod from the US FDA for tablets, which is used to cure high blood pressure, reducing the risk of the serious cardiovascular conditions such as strokes and heart attacks as well. But yes, so far this year the stock has been an underperformer. Ruchit, can the trend reverse for Zydus Life Sciences, and how are you placed on the entire pharma pack, so to say?
So Pharma has seen some consolidation over last few months, but I think there could be some selective stocks where we can expect an up move going ahead. Sun Pharma is looking good. Lupin is trading around its support after a huge consolidation. Even Zydus Life Science has good support around this 900, 920 range. So selective stocks can witness a pullback move, but whether that would turn into a significant uptrend, that is too early to take a call. Depending upon how price volume action would turn out over next few weeks would be important. But yes, if from a positional perspective, one is looking to add any stocks from their portfolio, then stocks such as Sun Pharma, Lupin, Zydus Life Science could be part of them.
Okay, all right. That's the view coming in for the counter. Then let's take another viewer query. We have Harshit who's been asking the view on Anant Raj on how the counter looks like. Of course, today the stock has been doing some, well, 2.5% gains coming in for Anant Raj. But if you look at the past 1 month moves, the stock has seen a bit of a downtick, 3% downtick. And of course, so far this year also the stock has been a rank underperformer as well. Anant Raj, any views on the counter, Ruchit? The stock today has been showing some good moves, but in the past couple of sessions, the stock has been consolidating about that 620 to 650 zone.
Yes, so we witnessed a very huge volumes in the month of September in Anandraj when the stock rallied from 520 to 740. From 740, the stock has corrected back towards that 560, 580. But the kind of volumes that we had seen during that uptrend, in selling, no, the volumes are not that high. So, which ideally is a good sign. So, no, but from a momentum perspective, 620 is the immediate resistance for the stock, which is its 20 DMA. And if the stock manages to surpass that 620 level, then we could see a decent up move in Anandraj.
Okay, all right. 620 levels, all right. Just one last question before we let you go, Ruchit. What are your top picks at this hour? I know we discussed a range of stocks, but what are you liking right now?
So from the banking space, mid-sized banks, I think, are looking good over here. Mid-sized private banks. So IDFC First Bank is one of those stocks where technical sector is looking positive post the recent correction. The risk-reward ratio is looking favorable over there. So short-term traders can buy IDFC First Bank with stop loss below 77 for potential up move towards 85, 86 in the near term. And apart from that, latent view analytics is another stock where we are positive on this one. So primarily, if you look at the about 10,000 crore market cap company, this is, and if you look at the small cap, mid cap space, when the prices have corrected in this month, this is one stock which has formed higher top, higher bottom structure, that too with very good volumes. So during broader markets correction, the stock has shown strength. So I think this clearly indicates a good buying interest in the stock. So at current levels, one can even go long on latent view with the stop loss below 480 for potential up move towards 550.
Okay, all right. Those are the levels and stocks we need to watch out for. But with that, we have to let you go, Ruchit. Thank you so much for your time in joining us.
Thank you, Lovisha. Thank you for calling.
All right, let's take a quick check of the markets before we move on to our next guest of the show. We have Sensex, which is up by about 400 points. Nifty has also pulled through 120 points gain above that 26,000 mark. We have we are back to reclaim those levels as of now. And if you look at from the sectoral pocket, what has been doing well, that is your consumer durables. That has been shining in the trade today with about nearly Nifty consumer durable index up by about nearly 1% itself. Nifty metals has been one of the top power lifters, nearly 2% gains coming in for the Nifty metal index as well. ITs also seems to be doing well, 0.5% gains coming in from there. Banks, ITs, both of them, both of these heavyweight counters have been doing well. So apart from that, if you look at on the other hand, if you look at Nifty Realty Index, that also seems to be doing well, nearly 0.3% gains coming in for the counter as of now. So all in all, even the FMCG basket, which was weak in the earlier session, has rebounded it in the positive territory, nearly a 0.2% gain coming in for there. So right now we can see some broad-based buying which has emerged in the markets as of now. All right, before I move on to our next guest of the show, let me introduce you to Money Control Super Pro, which can be your ultimate investment superpower. You can get all the live trading calls, investment ideas from SEBI registered experts, pre-identified chart patterns, and AI-powered stock alerts right on your WhatsApp to help you trade and invest with confidence. So download the Money Control app and subscribe to Super Pro today itself. All right, with that, let's quickly move on to our next guest of the show. We have Arvind Chari, Chief Investment Strategist at Q India Corp UK, joining us. Arvind, good morning. I mean, today it seems like a good news for the markets, but in the past couple of sessions, we have been quite range bound. And now that the earnings season is over, what are you expecting would drive markets ahead?
Good to speak to you, Lovisha. Thank you for having me. I think from a macro perspective, the way I see the positioning happening, I am generally pretty optimistic, and I haven't been this optimistic since maybe 2016-17 on the macro trend. We are finally seeing some aspects of income growth and demand increasing, and you've seen both the central government and the state government taking steps. Most state governments have put almost 1% of GDP of direct income support in various forms into the economy, and we actually quite like it. India growing at 6.5% does not create the jobs and the income that is required for the overall population. So when government does some amount of income transfer, especially after the shocks that we've had, demonetization, GST, ILFS credit crisis, COVID, there has been a decrease or the income growth has been slowed down. And you've seen that impact in consumption and consumption sectors and consumption stocks, where volume growth has not been as high. So you're seeing some aspects of the demand side being fixed by the center and the state governments. You've seen the center moving with some income tax rationalization. GST rationalization was a fairly big aspect, and I think you would finally see the income growth consumption side pick up. The other aspect that the government seems to be very vehement on, and it's going ahead, and I heard that in my trip to Delhi last week, was the two commissions that the government has set up, the Gauba Commission and the Somnathan Commission, on essentially deregulation and reforms, and you've seen some aspects of it play out. So from that perspective, I think we are slowly moving towards the 7% GDP level and maybe slightly higher than that. And if that momentum persists over the next 2 years, you will see earnings growth pick up, because that has been the issue with the markets, and the last year's underperformance kind of predates from the fact that earnings growth has been in single digits and valuations were very, very expensive. So if earnings growth has to catch up, and if on the nominal GDP growth, and if you see some nominal earnings increase, I think that's a fairly good setup for the markets going into next year.
Okay. Arvind, every time Nifty has been approaching 26,000 mark, it starts trickling down. Everyone was hoping that by November end or even early December is when we can claim that all-time high levels. Do you think it's still possible, or it's a far-fetched dream for right now?
No, I as at Quantum, what we do in terms of how we position our strategy, which is the value strategy, we are looking for effective earnings growth over a 2-year cycle. That's how we play. So I have no idea about whether the Nifty will scale recent peaks, but what we see from our underlying portfolio and the general, some of the large cap and mid cap names and small cap names that we cover. It looks like, as I said, that there is earnings momentum, and if I look at what we think about what we call our upside potential, that is back to its long-term average. So from that perspective, we are reasonably, I won't say bullish, but we are reasonably constructive on the outlook over the next 1 to 2 years. Very near term, it's very difficult for me to say.
Okay, quite constructive. But Arvind, India has been underweight in majority of the global fund houses because of the lack of the earnings growth. So do you believe that, given that you have been quite constructive from the next 1 to 2 years time horizon, do you expect that recent earnings will change the stance that the global fund houses have been holding?
Yeah, that's a good question, Lovisha. If you see the pattern of foreign flows that come to India, I would believe about 75 to 80% of what India receives as foreign flows comes through what you mentioned about global fund houses. So global allocations or global emerging market funds or Asia funds which have an India allocation. So for them, it is what matters is what is India's weight in the index and what is India's relative valuation, relative earnings growth and relative attractiveness. So that's what drives flow. So if you just take some time back, and if you go 5 years ago, I think India has been a spectacular outperformer in the emerging market segment for a fairly long period of time, till at least till 2024. And you could see that foreign investors or these global funds were over allocating to India and taking money away from maybe China, which was kind of became uninvestable. And that went well for a good period of time. If you also see India's weight in the global, the MSCI emerging market index, it went from something like 8%, 9% a decade ago to almost close to, it went about 20%, and now it's close to about 20, near about 20%. So that just made many foreign, like global allocators have who are looking at emerging market as a fund category, they were allocating to India. And in the last year, as we said, given the drop in earnings and also India's relative outperformance. So most of the foreign outflows that we have seen, maybe about $25–30 billion of foreign outflows in the last 1 year, it's essentially looks like it's been like profit booking. India has done relatively well. So if you look from the 30 billion as compared to the market value of all foreign investors, that's about 850 billion back then. It is not much. It's less than 5% of their holding that they've taken on. In absolute sense, 30 billion is a large number, but in terms of what they actually own in India, it's a small share. But we haven't seen a major flow back. So that remains a question. But if I look at India's relative valuations against the MSCI EM and India's underweight, as you mentioned, India's underweight in global emerging market portfolios compared to its own history, looks like I think you would expect some amount of allocation to come back to India. You will see some increase from these global emerging market pools, and you also heard in the last 2-3 months markets do a lot of thematic investing, right? Market always goes through different mood swings, and so September India was branded as not AI, like India does not have AI, and hence India is underperforming, and it explained I think about 20–30% underperformance that India had against emerging markets. And now that the AI is going into a bubble territory, people are writing mentions about that India is a reverse AI trade, because India does not have AI and foundational AI and large investments in data centers. India might be a better off play in this AI bubble territory. So I think global investing will keep moving through mood swings. So from the emerging market allocation, I think we should see some allocation coming back to India, given where especially the large cap valuations are in compared to history and compared to other global peers. What we don't see yet is any major India dedicated allocations. So as I said, roughly about 20% of the flows are dedicated to India through funds or through these large investors like sovereign wealth funds and pension funds and university endowments and foundations. We don't see any major increase in their appetite or their allocation. I keep meeting these investors time and again. I can see some interest that they want to research India and they are considering to do dedicated India, but the interest is still very limited. So till the time that does not become a big share of India allocation, we are subject to what global fund managers or global fund houses think about India from a relative valuation perspective.
Okay. Arvind, you mentioned about the AI bubble. I'll also, touch upon the AI services play which is now emerging in India. So, given that the kind of capex moderation that everyone is expecting now that majority of the companies have already invested huge amounts in building the AI infrastructure, do you believe that this is the point that India would also benefit from this being a services play, and how would you, see Indian IT going ahead in the terms of the AI services play going ahead?
Yeah, absolutely, Lovisha. I think that's reflects in our positioning as well. We've added to IT services, and which is just go back in history again. Like if you look at the Y2K issue that we had, if you look at the aspect of digitalization or the aspect of cloud and cloud servers, all of these were supposed to be a problem for, especially the digitalization and the cloud. It was supposed to be an impact on IT services, but we found out that essentially the Indian IT services companies, both the large and the mid and the small tier companies, they went and implemented digitalization and internet and all those cloud services in the large enterprises. So they are the global delivery and they are the ones who do enterprise level activity. I think something similar should happen with AI as well. So as you said, AI models and all the aspects have been built. You would need enterprise in the enterprise, or you need AI deployment at scale. And I would believe that Indian IT services companies would have already taking steps towards that, and they will ensure that they will deliver enterprise AI at scale. So that's the logic. You will still find some smaller niche, so newer age software services companies who are specifically focused on particular domains where they can use AI to deliver outcomes for clients. Maybe they might take some share away from the large IT services companies, but I think what we saw during cloud and during digitalization, the entire pie itself increased. The IT spends of global firms increased because they adopted these things. So I would believe that India will actually should be a very big beneficiary of delivering AI and enterprise AI at scale.
Okay, all right. Arvind, I'll come back to your point of where you were pointing out that India's relative valuations against the emerging markets have become quite attractive. So there could be some allocation which would return to India. But in terms of earnings growth, let's scale back to that, because we started off in the month in April hoping that there would be a double-digit earnings growth by FY26 when we end it. But so far, in the last 2 quarters that we have seen single-digit earnings growth. So do you believe that Q3 and Q4 is where we can go for a track on the double-digit earnings growth, or what are you penciling in as of now?
Looks difficult to happen within a quarter, but I was indicating more for FY27 because see, one issue has been nominal GDP growth, right? So earnings are nominal in nature, and if nominal GDP is below 10%, and that's been for the last 2-3 quarters, you would expect that earnings eventually, nominal revenues of corporates and then eventually nominal earnings will also track that. But what I was indicating from the perspective of if you also look at some aspects of private capex, I think we are finally seeing some increase in that. I was looking at some numbers from CMI and some corporate order book numbers. The trend seems good. So as that translates into more investments, because as I said, the one aspect of why private capex has been so low has been that Indian companies have not been able to capture global export market share. And if you look at the kind of products where global exports have increased in the last 5-10 years, Indian companies do not have any major product or any major export in that scale. So India's relative export share has not grown much. But the other aspect was domestic demand. Like Indian corporates, if they don't see domestic demand, there is unlikely to invest. They are unlikely to put in capacity. Although their balance sheets are good and they have enough cash generation and the corporate tax cut increase their profitability and margins, but they were not seeing demand. Maybe if as the demand increases and as government PLI scheme and the component scheme and all those things kind of peter down, you should expect some increase in private investment. So the combination of some boost in income and consumption and demand, and there is, say, supply side responses both in terms of deregulation and as well as in terms of support to the market. That's reasonably indicative of the fact that the growth momentum that we are seeing now should sustain. And once that happens, you would expect nominal GDP growth to increase and come back to at least to that double-digit 10% level. And if that happens, you should expect nominal revenues and earnings to grow at about, generally if you see large cap Indian companies go at about 200-300 basis points above nominal GDP. So that's where the outlook is coming from. But you were right, previously and especially late 2024 and early 25, the earnings has been very, very disappointing, and that reflects in the relative market valuations in India.
Okay. But for like, if we had to conclude FY26, then what are you envisaging? I mean, like, is it going to be 10 to 11%, 11 to 12? What is the figure?
I think the consensus is below 10%. If I remember, whatever I remembered about after the September earnings estimates came about, it looks like it was still below the 10% level. But I could see some FY27 estimates in that 12 to 14% range. So that is what I was indicating.
Okay. Arvind, take us through some of the sectoral theme pockets where you have been bullish on, where you find some growth visibility, valuation comfort after the second quarter earnings, and something that you have been underweight on, both of these sides.
Yeah, so at the quantum value and the Q India value equity strategy, that is the flagship, we don't play themes. What we are doing is looking at about 220 companies, covering them every 6 months, and then we look at median fair valuations for all these companies across sectors over a long period of time, and then we decide our buy and sell price. We want a discount to intrinsic value to be able to buy any stock, and once it trades above intrinsic value, we kind of trim and sell. That's how we look at it. So if you look at the underlying portfolio, which is a reflection of this process, we will right now we are overweight financials. That includes public sector banks, private sector banks, life insurance, general insurance, health insurance, and asset management. So that is one area where we see that the valuations are at a discount to historical median valuations, and we think that there is a growth momentum and there is a mean reversion that will happen to median valuations, and so we are overweight on that. We're also reasonably, I think, equal weight or overweight on IT and IT services, and on the consumer discretionary space, we have been playing the auto, the two-wheelers and the large tractor manufacturers. That's been our holding. Where we have been underweight and we remain underweight is consumer staples. Although valuations are getting a reasonably close to where we would think it will be getting interesting, but we've not been able to own consumer staples purely because of valuations for a long period of time. On the industrials and the electronic manufacturing, we recognize the growth, but we just think that the valuations for some very simple businesses are really absurd. So and if I look at from a market cap perspective, although we are cap agnostic, we are liquidity cherishers and we want governance as a filter. But if I look at long-term, again, median valuations, the large cap indices are trading at very close to its own long-term averages, whereas the mid and small cap are trading at significant premium, almost 30-40% premium to its own long-term averages. So there you would want to see a much more earnings growth or order book growth or revenue growth to follow through. But in the large cap space, I think the valuations are slightly more palatable.
Okay. Arvind, what about defense? I mean, how are you placed there? I mean, there has been some talk about that the valuations since have once again turned overheated, but Given the kind of growth visibility that the defense sectors has been commanding, do you believe that there's still comfort and investors should be placed on this particular theme?
Yeah, I mean, we do cover some of those stocks, but for us, it's a valuation constraint that we have not been able to deploy capital. I mean, from a theme perspective, from a government spend perspective, and the offset and domestic production, it looks like a fairly good case, and you could see that in in the order books and the revenue growth of some of these companies. But I think valuations are really stretched in that space.
Okay. Arvind, several of the frontline companies, be it your HUL, TCS, Asian Paints, they've seen structural weaker growth, and newly listed firms, they have gained disappropriate attention as well. So over the next 5 to 10 years, do you expect the leadership in the Indian market to meaningfully shift towards these newer entrants, or do you think that the traditional blue chips will also regain their strength once this entire IPO euphoria settles down?
Yeah, India is a hyper-competitive market. It's always been hyper-competitive. And now, because in the last 10-15 years, because of digitalization, the access to market for many of these platforms and products is radically different. Today, you can be a reasonably homegrown, developed brand, and your ability to access markets and access certain pockets of the consumption economy is very quick, right? So that kind of competition is there. So when we see consumption growth slowing down, and that's been true. We can see that in consumer expenditure surveys. You can see that in broad numbers in the economy, and you can see the volume growth of certain of these blue chip large companies that you mentioned. We have to that is still true, and there is an impact on volume growth. But you have to caution that with the fact that maybe in certain segments of the brands that they have, they are facing that hyper competition from new age players, right? So that is going to remain, and I think it's only going to increase. The fact, what we need to figure out is, can these large entities remodel and rechange or rebrand their distribution strategy? Like at least if you look at the consumer staples businesses, their major moat was distribution. In a big manner, they were available, but that distribution is being challenged based on last mile delivery or platforms doing that in much more easier manner. So will they adapt? Of course, they have the cash and they have the balance sheet and they have the brands to be able to do it. But whether the new age companies keep taking share of their overall pie growth, that looks like it is already happening, and maybe it will happen again. The challenge for them and the outcome for them is, can the pie increase? Like, is the Indian discretionary consumer, like right now we have the 100 and 150 million top income spenders who are the major discretionary spenders. As growth picks up, does that widen into becoming 200, 300 million people who will have higher disposable income and will look for what we call premiumization, and they keep premiumizing? And from the bottom layer, instead of 800 million being in the water level, can that increase higher? That is the eventual activity, and that happens. We've seen that across every global country, where as per capita incomes have increased, you've seen that more and more people have disposable income. If you look at the recent government consumer expenditure survey that was put out by the PMEAC, you can see shift in what a rural consumer was, basket of rural consumption 10 years ago and what it is now. And you can see some aspects of consumer durables and consumer, some discretionary items picking up. So that is the broader outcome. The pie has to become larger for everyone to benefit. Right now, maybe at the top end of the high income space, you're seeing kind of significant competition by these new age brands who are able to deliver faster. And that reflects in the earnings growth and the revenue and the volume revenue growth and the valuations of some of these blue chip large FMCG companies.
That's right. Competition has been quite heating up, and this could change the market leadership going ahead. But all right, with that we have to let you go, Arvind. But thank you so much for your time, and we hope that we connect with you soon.
Thank you so much.
All right, let's take a quick check of the market. So where we stand, Sensex is up by about 500 points. We have powered through the day, and Sensex is now up by about more than 0.5% as of now. Nifty is also up by about more than 0.5%, 180 points gain coming in for the Nifty index as well. Above that, 2650 mark. That's what we have cruised through as well. Of course, there's a broad-based buying in the market which has emerged. If you look at from a sectoral perspective, all of the sectoral indices have been trading in the green and well ahead. If you look at from IT stocks have been doing well, more than 0.5% gains coming in from there. Metals also have been powering through, 1.5% gains coming in from that particular pocket. PSU banks have been leading the charge. Banking index has been also doing well. Autos have been also showcasing a gain of about 0.5% as of now. If you look at the broader end of the markets, they also continue to exhibit resilience. Mid caps have seen a gain of about 1%. Small caps also showcasing a gain of about 1% as of now, and both of the broader end of the markets have also been outperforming the benchmark indices. But we'll watch out whether or not in the second half of the trading session we get power through ahead as well, and whether or not we sustain these levels going ahead into the trading session as well. But yes, for now it's a positive start to the December series, and we'll be watching out how the day progresses as well. But yes, with that, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3 o'clock for closing, and we will be understanding how the market is developed with our experts, and we'll also be discussing some individual stocks which have grabbed the headline. So until then, signing off, do stay tuned to moneycontrol.com.